Hi everyone, my name is Javakir Osmanov, and here is my business project that has been undertaken as part of my Masters of Science degree at BPP University. So, the title of my research was the empirical analysis of mergers and acquisitions in asset management industry and the evaluation of pre and post-merger execution. And the case for the study has been chosen as the company Standard Life Aberdeen. The followings are outlined are the research question and objectives that I've put right against my business project, and the question is to analyze to what extent has the merger been successful for Standard Life Aberdeen, and the following aims and research goals I've put were to investigate the notion of mergers in asset management industry and the latest market tendency that can be observed in the world of asset management. The second one was to examine the pre-merger analysis of both companies separately, which were Standard Life plc and Aberdeen Asset Management, by using various business and financial comparatives, including SWOT analysis, Basel analysis, industry analysis, which is the Porter's 5 forces analysis, and of course different financial ratios and the figures. Moving on, the third one is to examine post-merger performance of newly recently joined Standard Life Aberdeen company with implementation of the same techniques and tools that I've just discussed recently. And the last but not least is to determine the key issues and problems that derived after merger, and to compare key financial indicators, namely the capital structure itself, the assets under management, which is considered as the key financial indicator for any asset management company, their solvency and profitability ratios. So there were several reasons for the merger, but I would like to highlight the following ones, which was a new market tendency. As regards to this, I would like to say that the landscape of the asset management industry was shaping very quick, and investors started to withdraw their funds from actively managed companies and to invest more into passive funds, because active asset managers were underperforming the passive ones over last decade, and also that meant for the investors that their revenues weren't as high as expected, and the risk was very high. Thus, small and medium-capped companies started to join and unite their forces in order to increase their profitability and revenue as well through economies of scale, through reaching economies of scale, and to cut their costs, administrative and operational costs. The second one was that the company, which was with headquarters in Edinburgh, which is Aberdeen Asset Management, had continuous capital outflow. The company was bleeding out with this kind of loss, whilst another company, the other one was Standard Life plc, who didn't have any other future growth opportunities in the market, and their revenues, they had continuous revenue stagnation over the last periods, and of course they would like to join their forces in order to create UK-based the largest joint asset management company. Moving on, here are the main objectives of the merger that the company has proposed and outlined for themselves. The first one was to cut costs and to lower their expenses through achieving economies of scale. The second one was to increase their assets under management, which is, of course, I've said already, the key financial indicator for any asset management company. And the last but not least, to increase their revenue and to recover and enhance their profitability ratios and margins. So here are the results of my analysis undertaken, and starting from 14th of August 2017, which is the day of merger completion, up until late spring 2020, the share prices have dropped by 56%, the revenue decreased by 25%, and administrative and operational expenses increased by more than 60% during over 3 years period of time since merger. And also assets under management decreased by more than 17.5%, which is directly linked to the loss of key partners, specifically Scottish Widows Company, which is owned and powered by Lloyds Banking Group, has withdrawn at a single time more than £100 billion and constituted the vast part of this loss. Also, in regards to internal situation within the company, the staff morale was so low and the turnover rate was very high that the key employees, even though started to look and search for other job opportunities at competitors, firms or companies, or even to change their industry at all. This also reflected on negative corporate image, and the Standard Life Aberdeen lost trust from the external stakeholders and especially investors, who started to worry about the company's future and think whether they should withdraw their funds and invest into other competitors or to invest into more passive funds and to follow by the market tendency. In regards to the recommendations part, I would like to highlight that the Standard Life Aberdeen should revise their cost structure and sell out their non-profitable business units such as insurance companies, because they are not yielding high margins anymore, and to improve their internal atmosphere as well, and to try to keep their key employees and to enhance their retention scheme. Also to follow the market tendency as well, and to search for alternative passive funds opportunities, and to, of course, employ agile and 2KM tools and techniques in order to enhance their performance and to minimize the risks whilst they are adapting under this current very dark times for the company. And in order to establish a very good and positive corporate image, the company needs to develop and support CSR projects, and of course to improve their public relations, because those two, which are CSR and PR, are very key indicators from the perspectives of non-financial aspects, and that directly influence on the communication between the company and and external stakeholders. So that is the end of my brief presentation of my business research project. Hope it was very informative and useful. Thanks for your attention and thanks for your time. Have a good day. Cheers. Bye bye.